Guys, all right now, pipe her down. We are gonna get to the LLCs today. Yes, we are. Today is Taxes Made Simple with Carlton, your host, and today we're gonna be going over the 5 mistakes with LLCs. Let's get to it. Welcome back to Taxes Made Simple. In today's video, we're gonna be going over the top 5 mistakes with LLCs. And part of the reason why we're going over 5 mistakes with LLCs is a majority of you who are watching this video are already business owners or you're investing in real estate. But a majority of you may have some dormant LLCs sitting out there or some LLCs you're not operating in the best ways. And I want you to know about some of the mistakes you could be making that could be costing you money. Let's dive in. Now, I love having an LLC because when I go into business, I never want people to think that I'm the person owning the company. You see, an LLC is not just a means for separating the liability from yourself, it's also a way for you to protect yourself. And one of the biggest mistakes I see with LLCs is people naming the LLCs in their own personal names.
Oh, really?
Guys, I don't know about you, but when I'm trying to grow a business strategically, I want to make sure that I'm protecting myself in the best ways possible. But if I put a big sticker on my business saying, hey, my name is Carlton, if anything happens, come sue me, I don't know if I'm really giving myself the best protection with my business. Now, this is not to say that it's not important to brand yourself as a business owner. I think it's super important to brand yourself. There are tons of consultants I work with that need to have their business name on their business. There are lawyers and doctors that prefer to have their last name on their business. But I do have some business owners that are doing e-commerce or some people who are doing day trading that are naming their corporations after themselves.
Who?
And if you're a real estate investor, I really hope you're not naming your corporations after your name or your family's name. And so I want to make sure that you guys are protecting yourself. Mistake number 1 is not taking the time to think about how you wish to name your LLC for the long term. And I want you to be considerate of that because once you choose your name for your LLC, that is your name. It is very hard to change the name of your LLC. You're gonna have to shut your business down and refile a new business tax return. So it's so important that we start our business off with just a little bit of information about what could possibly happen in the event of a lawsuit. And it's important for us to understand that we might wanna fly under the radar a little bit if we're trying to grow wealth strategically. Now, let's just say you decided to set up an LLC. And when you set up the LLC, you had this big dream of becoming this real estate investor, or maybe you thought you were gonna be flipping real estate inside of your LLC, but you just never got around to doing it. So what happened to that LLC you set up? Did you file the tax returns for it? Is it still alive? Are you now telling your CPA you want to use it because now you're starting a business? The next mistake that you guys have to know is having a dormant LLC. Having a dormant LLC is costing you money because you're not using it. And having an inactive LLC means that you still have to file the tax returns, submit your statement of information, and pay your franchise tax. Now, guys, I want to give you an example. I live here in the state of California. A lot of my clients are from the state of California just by association. I had a client that came to me and he had not filed one of his LLC tax returns going back to 2014. When I talked to him, he told me it was extremely important that he kept the name of his business.
Oh, really?
He had clients that were already associated with this business name, and even though he hadn't filed his returns in a couple of years, he was still conducting business underneath that EIN number with that LLC. So I told him, hey, in order for us to make sure that you can continue to have your business name, we're gonna need to file the LLC tax returns for every year you haven't filed. But in addition to filing the LLC tax returns for every year, you're gonna have to pay the franchise tax to the state of California, that $800 that California taxes us every single year, for every year you didn't file. Not to mention, you're gonna pay late fees and penalty fees for filing late on that $800 franchise tax. This ended up coming out to over $9 $6,000 for my client just to keep his business name active, all because he let his LLC go dormant. Guys, it's very easy for us just not to let our LLCs go dormant by just being mindful of the fact that it has to be filed every single year. As soon as you open something, you need to make sure that you are filing it. And so I look at an LLC like a child. Once you have given birth to this thing, this business, you can't leave it unattended. And after you've created that business, you have to make sure you're following up with it every April 15th when you need to file the tax returns. Now, keep in mind, every single state has a different franchise tax for LLCs. Yes, California just happens to be a highest state. So is New York. But if you look around, certain states have different fees for the LLC. Just be mindful that you're paying in to that franchise tax or that state tax that you have to keep your business active on a yearly basis. All right, if we have an LLC, chances are we're either running a business where we're providing products or services, or we're running a real estate investing business, so it's completely passive. But I want to talk for a second about my clients who are running an earned income business, where they're providing products online or they're providing services such as consulting. Anytime that you have earned income coming in through an LLC, one of the things that you might want to do is pay yourself, right? I mean, just think about it. If we're a business owner, we need to live. We need to pay our bills, we need to pay our children. Whatever it is that we got to cover, it's coming from our business. So how do we go about paying ourselves from our business? One of the things that comes up in a lot of my consultations is LLC owners tell me, Carlton, I took payroll this year. I wrote myself a check for $25,000. I wrote myself a check for $50,000. I get confused because when you're an LLC owner, you're just a shareholder. So if you're writing yourself a check for $25,000 from your LLC to John Smith's personal account, your business is not receiving a deduction, and that is not payroll. So I don't want you getting confused or talking in the sense that you are doing payroll. I understand you're learning. What I want you to understand is that you've taken what's called an owner's distribution. An owner's distribution is all that it means. You just distributed money to yourself. But the one thing that you have to be mindful of is that LLC owners only take owner's distributions. So if they hire other people, you can take a deduction for hiring other employees. But if you hire yourself inside of your LLC, you don't get a deduction by taking payroll unless you've already made an S election to tax yourself as an S corporation. S corporation owners who have LLCs taxed as S corporations get to take a deduction based on the amount that they paid themselves. But LLC owners who have not switched over to an S corporation, they do not get a payroll deduction for when they pay themselves. It is simply an owner's distribution. That is a very key difference. You need to know that. Now, this leads me into the S-Corps. A lot of my LLC owners are late on making their S elections. You see, the S-Corp can save you when the benefits outweigh the cost for you to switch out of the LLC to the S-Corp, but you're also hurting yourself if you're an LLC owner who didn't switch your LLC to an S-Corp in a reasonable time period. Part of the reason why I'm saying this is because the IRS gives us strategies to help us reduce our tax bill. They told us that we can fill out 2 specific forms to transition our LLC to an S-Corp. But if you don't fill out those forms in time, then when you meet with your tax guy and you're saying, hey, what can I do to reduce my tax bill? And he told you should have been an S-Corp, you're gonna be upset that he didn't tell you ahead of time that you should have submitted these 2 specific forms to transition your LLC to an S corporation.
Heck yeah, buddy.
So we're gonna go over those 2 forms that you need to know to transition. Form number 1, the 8832 form. This is the entity reclassification form, pretty much saying, hey, I wanna put on a new skin, and the new skin I wanna put on is the S corporation. The 8832 form will be utilized first anytime you are reclassifying an entity. Directly after using the 8832 form is the 2553 form. I'm coaching you guys on just 2 specific forms that you're gonna need to remember. The 2553 form is the form that we utilize to actually tax ourselves as the S corporation. 8832 is the entity reclassification. 2553 says we're partying like an S corp now. This is how we get into the S corp vehicle. Failure to not file these two forms results in you being taxed as an LLC, which results in you still being subject to self-employment tax of 15.3%, which also results in you not being able to take a business deduction for you being on payroll. That is what you lose out on when you don't fill out those forms in time. So now that we've watched this video and watched this little segment, we know what two forms we have to complete in order to avoid not being an SCorp in time for filing your tax returns. Let's jump into mistake number 5. Not taking payroll after you've made the S election. You see, once you've switched from the LLC to the SCorp and you followed those correct steps, filling out your 8832 form and your 2553 form, you're almost all the way there for being in an SCorp.
Oh, really?
The last thing you have to do to ensure that you're getting all of your deductions as an SCorp is making sure you take your payroll. You see, when you transition from the LLC to the S corporation, you have to process payroll with a payroll company. You may have heard of ADP. You may have heard of Carla Dennis and Associates. We are the types of companies you have to actually process a physical payroll tax return for, which means a part of that is going off to the government so they can see how much you're paying in payroll taxes so that you can receive a deduction based on the amount you paid yourself. So let's go over an example of how we can take payroll inside of our LLCs that have now been taxed as an S corporation. If we're an LLC that's taxed as an S corporation, one of the things that we have to do being in an S corp is we have to take a reasonable compensation and run payroll for ourselves. When you're the owner of your own S corporation, you have to take payroll. What this means is that you'll become a W-2 employee underneath your own business. You're still a business owner. Don't be scared. You're still a 1099 income earner, but you're taxing yourself as a W-2 earner. What this does is it eliminates part of the self-employment tax that you pay into if you were to remain as an LLC. Now that you're paying yourself payroll, you're gonna pay payroll taxes based on the amounts you paid yourself. So let's go into an example. Let's say I made $100,000 selling products online, whether it was candles or selling stuff on Etsy. If I make $100,000 inside of an S corp that I switched from an LLC to an S corp, I have to take a reasonable compensation. So let's say I take a reasonable compensation of $30,000 after making $100K. My business will receive a $30,000 deduction just by placing myself on payroll. That's correct. My business will receive a $30,000 deduction. Now, I don't want you to get confused. Just because your business received a deduction for you placing yourself on payroll does not mean that you're gonna avoid payroll taxes based on the amounts you paid yourself. So you're still gonna pay payroll, Social Security, and Medicare tax, which comes out to about 7.65%. Plus you'll pay federal and state taxes based on the amount you paid yourself. But where the benefit truly lies in switching from that LLC to the S corporation is that you're only paying that payroll tax of 7.65% based on what you paid yourself, and you're not paying 15.3% in self-employment tax based on all net income inside of an LLC. Having a payroll deduction helps eliminate part of that self-employment tax, and it gives your business a deduction when you place yourself on payroll. That is part of the key and why we need to know some of these mistakes in having LLCs. Now, my name is Carlton Dennis. If you guys like this video, what I'd love for you to do is join some of the other videos. I'm putting out tons of content, but I'd also like for you to like, comment, subscribe so I can help out the YouTube algorithm and continue to make valuable content like this for you guys. I look forward to seeing you on the next one. Over and out.